Good evening, everybody. Welcome to this evening's webinar with Informa and Peter Hofmann. My name is Del Kama, and I will be presenting and making introductions. And of course, today's topic is integrating governance, risk management, and compliance. Before we go into introductions with Peter, I'd just like to run through a couple of housekeeping points with you. Slides will be available on our SlideShare page, and the link will be emailed to you. The recording of this webinar will also be available for you to download. Both links will be emailed to you in about 5 days' time to give us some time because of the holiday period. Please do take the time to complete a post-webinar survey that will pop up at the end of this webinar. You can also type out your questions throughout the session. However, time will be allocated at the end of this webinar for Peter to address your questions. Now's the time I would like to introduce you to our presenter for this evening. It gives me pleasure to welcome Peter Hofmann to this webinar. Peter is the Executive Director of MFX Options and Solutions, which specializes in business management and corporate strategy, along with operational management consulting. Peter brings with him a wealth of experience, and his integral involvement with projects undertaken have been for a range of international clients, including strategic business plans, functional plans, processes, supply chain management, strategic planning, and ERP process analysis for implementation of ERP systems. Welcome, Peter, to this evening's webinar.
Delna, thank you very much. It's Peter, and good evening to everybody. As Delna indicated, strategic management consulting is the focus of our business, and that invariably includes, as a key area, the issue of governance, risk management, and compliance. And my objective this evening is to give everybody a very broad introduction to what the concept of governance, risk management, and compliance is all about, and what GRC as an integrated framework is focused on. So let's kick off and have a look at, well, what is GRC? GRC in essence, and this is extracted from Deloitte, a publication issued by Deloitte in 2013. And you'll pick up as I move through my few slides I have this evening that quite a bit of the material I use is extracted from Deloitte. So GRC, what is it? Well, it's a management model. And I think that's a fundamental point, is to understand that GR&C, which governs risk and compliance, is not around establishing a structure within a business, a department or a division. It's around establishing a model in the business, a model that looks at how you can unify the criteria that apply to those three key areas in the business. Goes a step further, and it incorporates the aspects of how communication and collaboration between stakeholders is managed within the context of governance, risk, and compliance in a way that allows for better management and control of a business, of an organization. It's really focused around saying, what are we doing in our business? And how can we integrate these three areas, the areas of governance, risk, and compliance? How can we integrate them to create value within our business environments? If we have a look very quickly down on the bottom in the sketch, we've got the three areas. In the blue block, we have governance, in the green, risk, and in the dark blue, we have compliance. So broadly speaking, risk, I'm going to start with risk. Risk is integral to a lot of businesses, and it's becoming more prevalent in the business environments that we operate. Why? Well, quite simply, business is becoming more complex and risks are becoming more prevalent. What's relevant within risk, and I'll go into some more detail just now, but it's around being able to identify and analyze risks, being able to present good profiles of risks and monitor risks so that the business is able to achieve objectives. Compliance is around complying with policy and procedures. There's legislative compliance that's relevant. And then what the what control infrastructure is put in place. Of course, compliance would include areas like our internal audit functions that look at ensuring internal control compliance within businesses. And the overarching framework is that of governance. And what is governance focused on? Well, governance is really about managing the risks, the execution of the business's strategy, as well as the risks that are incorporated or that emanate from the strategies that the business has chosen. What's the difference between these two? Well, very simply, a risk to a business may be the external risk related to market environment. However, if a business chooses to specifically grow its market within a certain geographic region, then the risk becomes very specific to that geographic region that it's operating in. So governance is the overarching area that's focused on ensuring that the goals and objectives incorporated within the strategy are given effect to through ensuring that there are good policies and procedures in place and that we have good structures and processes to be able to drive that. Now, GRC is fundamentally a strategic perspective or framework that is focused on creating a strategic link within the business. And broadly speaking, if we look at it, well, what is the strategy of a business? A strategy is around saying, where are we going with this business? Where is it? What is the direction that we want to take this business into? And it culminates in a strategic plan. And strategic plans are saying, well, if we know where we want to go, how is it that we are going to be getting there? If a business understands how it's going to get there, it creates systems and processes, and system doesn't imply an IT system. It implies a system in the broader context that has systems and processes that basically allow it to ensure the implementation of its strategy and measuring, monitoring to see whether it achieves its strategic objectives. And the GRC framework is in essence a part of that system process environment. It's a framework that allows management to monitor at an integrated level the components applicable to those three key areas. So that's broadly putting a strategic link into the GRC context. So why is it that organizations are looking at GRC and looking at how it can be done better? Well, it starts with the current environment we're in. We're operating in an environment that continues to bring a lot of uncertainty with it. And the uncertainty is driven to a large extent by economic instability. Here in the Middle East, we have the example right now. We have oil prices reaching lows that were last seen 12 years ago. And those lows are resulting in economic instability and uncertainty about the sustainability of the business models going forward. So there's a lot of uncertainty, and businesses are looking how they can govern that uncertainty and establish risk frameworks that allow them to manage the impacts of economic issues much better. There's concern about risks. There's a lot more focus on the effectiveness and the adequacy of control within a business environment. If we have a look, what are the market risks that are appropriate to the business? Again, I'll take the oil industry. We're operating in an oil major, and we're looking at saying, well, what are the external risks from a market perspective? And how are we as a business going to manage those risks? Put yourself in the position of a board member. There are a number of people sitting on a board that are responsible for managing a business that employs 80,000 people. They need good information that lets them look at risk and say, how will we govern this risk to ensure that we have a sustainable business going forward? The issues that relate to regulation, legislation, they're becoming more complex as we go forward. And again, a simple example, in our environment, we've got Emiratization as an issue that needs to be addressed by business. How are businesses going to govern whether they're meeting the demands of government in terms of ensuring diversity in the workforce? Business performance is an issue. A lot of businesses are focused in terms of management structures. Management look at business performance. It is about maximizing the bottom line for business. But the reality is that we can't maximize the bottom line at the cost of business sustainability. Businesses need to be sustainable in the longer term. And this is where stakeholder demands come into the picture. And we have stakeholders that are looking to business and saying, we are not only interested in the impact financially of the business and the stakeholders, the shareholders, we're interested in the impacts you have at an environmental level, at a social level. How can a board manage and govern its impacts at an environmental level. Think again, let's take an industry, the shipping industry. We have a company that operates in the shipping industry. They have an environmental impact in that they burn fossil fuels and they emit CO2 into the environment. What should their focus be? Balancing their financial performance against investing in technology that allows them to reduce their carbon footprint so that they can manage the expectations of the stakeholders, which would include environmental agencies. So stakeholder demands are starting to play a big role in how businesses govern themselves. And lastly, integrating the approach towards GRC, governance, risk and compliance, obviously looked at supporting decision making. In business, a lot of businesses have separate governance, risk and compliance functions. And at a board level or a subcommittee level of the board, it becomes very difficult to make meaningful decisions because they rely on pockets of information that have been put together from different sources in the business, and they don't integrate to provide meaningful insight into the position the business finds itself in. So GRC is evolving. And it's evolving because of this response to the uncertainty and complexity that exists in the market. What's important to note is that GRC is not about implementing a technology tool. It is a management framework that it's put into place. It's around a different way of thinking the business, integrated thinking to be able to create value and to provide people in management positions, senior level, like a board, with good information to be able to take decisions to achieve objectives and create sustainable business models. It's about driving maximum value from complementary activities. There's a lot in risk that complements governance framework, and likewise that in turn in the compliance area. So it's creating this value in these complementary activities. And it's about getting information to be able to drive not only performance in business, but also to achieve compliance within these areas of environmental compliance, social aspects that need to be complied with. So it's getting information to be able to drive all these areas. And in GRC, this is where our audit and risk committees start playing a vital role. Audit and risk committees are key sponsors. Why are they key sponsors? Because as a subcommittee of the board, they have a vested interest in ensuring that the strategy of the business is well-founded and implemented. And this is looking at how we can align the aspects of governance, risk, compliance, and the objectives of GRC at an integrated level with business strategy, creating that integrated framework in the business that supports our requirements. If we have a look at integrating GRC, very broadly speaking, it's important to see it as a strategic approach. It's not something that is done at an operational level in the business, but it's done with a strategic intent. It looks at improving the alignment between those three areas. And alignment implies we look at how we can simplify each area so we reduce duplication of effort. It's looking at linking the components in those areas with a business strategy, and understanding that the risk component is the critical component in this, because risk directly influences the strategic decisions and directions that businesses take. GRC is also about a common language and methodology towards identifying and assessing risk in the business place. And it's about focusing the efforts and concentrating compliance and assurance activities through getting clear views on what the risk appetite is within business. If we look at implementing GRC, or implementing a strategic approach towards GRC, there we go. It's around considering the big picture first. One has to have a look and say, what are the overriding objectives I need to achieve in my business? And how is an integrated approach towards governance, risk, and compliance going to achieve longer-term objectives that are created? When you understand the big picture, then you can go and form a cross-functional team. And the cross-functional team, and take note I say a team, not a department. It's around drawing resources from different areas in your business and establishing a committee that have the capacity to bring value by looking at the business from different perspectives and saying, well, how can we best establish governance structure? How can we best look at risk and integrating that with governance so that the committee provides insight into establishing this integrated approach? It's about defining the roles and responsibilities early on in the process. understanding who's going to be responsible for risk. And a very good example, is risk the responsibility of an audit and risk committee? No, it's the responsibility of business. And risk is filtered all the way through business down to line management level to ensure that risk is adequately addressed at an operational level within business. Very careful that we don't build silos when it comes to integrating GRC. We're not looking at creating another department that focuses on governance, risk, and compliance. We're looking at integrating these aspects in the business. Also, we need to make sure that we get the process worked out before we invest in the technology. I said earlier, GRC is not about an IT tool. This is not about going out there and getting software and implementing it and saying we have a GRC system. And there are a lot of tools out there. A lot of our ERP systems offer us a GRC component. It's not about the tool. It's about getting the framework established to drive value in the business and achieve strategic alignment. Look at getting rid of the overlaps, building efficiencies in the business. That's what integrating is about. It's about ensuring that we don't have duplication of effort in the business. By reducing duplication, we drive business efficiency. We need to create a common language in our business and an understanding around what risk is and how risk influences our business. But at the same time, we need to understand that when integrating these three components, each of those components may be at different levels of maturity, and we cannot expect all three areas to integrate at the same level from day one. So we mustn't lose the detail when we come to the convergence of the integration process. And finally, picking up and saying GRC or integrating GRC is a gradual process. It is not something that we implement tomorrow and we're done. It is something that we start, and it has a systematic approach that allows in gradual improvement or gradual benefit to business. What's also important in GRC is understanding stakeholders. And again, from Lloyd, very simple little representation of stakeholders, and I'm sure you'll pick up quite quickly on what this is depicting. It's really looking at the light blue portion at the top at the senior structure and the slightly darker blue portion at the low structures, and within those structures you can see up structure you have the board on the one hand and you have senior management on the other. And the board and management are ultimately responsible for guiding the business, and they also take responsibility generally for the relationships that we have with our regulators. Therefore, you'll see pulling out to the right, relationships with regulators are linked to board and management level. Flowing down into the business where we've got the business itself, there are a lot of people that play a role. And I'm not going to go in great detail, but really you can see from your legal department through finance, your customer relationship management, internal auditors, compliance function, your suppliers on the supply chain side through systems, and your controllers. Each of those people play a role in establishing a governance framework. They also play a role in terms of addressing, assessing risk within the business. Compliance within business. As I said earlier, internal audit is a key compliance function in terms of managing internal controls or ensuring internal controls are adequate and working. So really this is around saying when you look at implementing an integrated approach towards GRC, understand that there are a multitude of stakeholders both at an internal and an external level, and that needs or the interests of those stakeholders need to be adequately accounted for when we establish this overriding framework. Why? Quite simple. Because the overriding framework is established to create the information that flows back to the board so that meaningful decisions can be taken around not only strategy, but also around strategy that creates a sustainable business with meaningful benefit for stakeholders. I trust it fits together well. Moving along, well, what is the value of GRC? Why would we integrate it? We integrate it primarily to look at integrating the aspects, the three, so that criteria appropriate to them is unified, that we have an effort in our business that's coordinated as opposed to our siloed approach, and that is collaboration within a business around issues that are relevant to the direction that the organization is going in. Again, here you can see a simple little pictorial indication we have three key areas. We've got performance management, risk management, and compliance management. And at the center of those, these aspects together allow for meaningful decision making. If our boards have got good information on risk, good information on performance, and good information around compliance, they're able to make good decisions. And all of this is the overarching framework is a good governance structure. The integration of all of these obviously allows for better decision making. By integrating these aspects, it allows to an extent for the better assigning of roles and responsibilities in our business. It also provides a very good basis of communicating within our businesses around what these key issues are that drive strategic objectives being achieved. It'll be amazed if you understand what a big impact it has by establishing meaningful communication channels and formalizing those within the business. It also allows for applying an organizational-wide risk-based approach and allows for the implementation of a compliance program. Risk and GRC. I'm going to finish off on the aspect of risk, and very broadly speaking, again, extract from Deloitte's. It's around understanding the extent to which risk is entrenched or risk management is entrenched within a business. And it's around an effective risk management process which is focused not only on value protection, but also value creation. Because the risk management, by virtue of the words, always tends to imply a negative. People hear risk and they think, what could go wrong? The reality is risk management is around addressing those aspects that have potential to cause harm to the business, but also identifying the areas of opportunity that the business can take advantage of to create more value. And whilst I'm not going to cover the aspect of the risk intelligent enterprise per se, it is around growing the maturity of the business in terms of its risk profile, its risk maturity level, to the extent where it becomes an enterprise that uses risk in an intelligent way to govern the business and direct its strategies. I'm going to finish off with a very broad overview, which I'm calling a case study, of how this aspect can actually have a meaningful influence in business. And the case study I'm making reference to is that of Soro, a property development company based in the UAE. And very broadly speaking, this is to show how a sound governance structure actually helped the business save money. Now, so as I mentioned, property development established in 2005 and initially capitalized with 2.5 billion dirham. That equates to around $680 million. Now, the business grew, and through its growth, got to a point where they were looking for raising finance in the amount of $1 billion, which, of course, as you can see, was already in excess of the capital initially raised to finance a business. Now, because Oro had established very strong governance structures in the process of raising finance, and they looked to the market to raise the finance. They looked at issuing, as you all know, sukuk to raise $1 billion. And in doing that, both Moody's and Standard & Poor's analyzed the governance structures within Soro and to be able to rate the credit, give a credit rating to those sukuks. And because of the strength of those governance structures, they gave them extremely positive credit ratings. What did that do for them? It lowered the cost, the rate that they applied to the sukuk. Their cost of capital was lowered, and they ended up raising capital that saved millions of dollars in cost for them over the long term. So this is just a simple example of a business that through good governance structure was able to reduce its costs. So that's a broad overview. And from my side and the slide side, I'm saying thank you. And I'm now going to invite anybody to ask questions. Okay, here we have a question, and the question I have is, what is the relevance of enterprise risk management in a GRC framework? Now, enterprise risk management is merely taking risk management to a different level. It is viewing risk management from an enterprise-wide perspective rather than viewing it from a silo-based perspective. And invariably, ERM or enterprise risk management is a very good thing to look at when we look at integrating governance, risk and compliance, because the whole concept is that we look at the business from an integrated approach. Therefore, enterprise risk management in itself will help drive higher levels of integration from a risk management side. All right. It doesn't look like we have any more questions coming in. And for those of you out there, if you just want to pop a brief shout, pop a message saying that you have no questions or thanks, that would be great. And please remember, we're running through Informa. I'll be running a 4-day course on governance, risk and compliance, integrated governance, risk and compliance, which is going to answer a lot of questions around what we tried to cover in 30 minutes. It's going to be running next year, 2016 in May. And I look forward to seeing all of you that are attending the webinar at that course. And thank you very, very much. And from my side, I appreciate your time and a very good night.